when you're looking at measuring like liquidity or just like on-chain flows, stablecoins is the first thing that comes.
Let's talk a little bit about what you've been seeing on-chain recently. So what can you tell us about on-chain dollar? Karim, how's it going, buddy?
Good. Thanks for having me, Kash.
Karim, you're here to talk a little bit about some insights. You are the checker of chains over at Dune. Tell us, what do you do at Dune? And maybe give people some context on Dune in case they're not already aware.
Yeah, definitely. So I'm Karim, do enterprise customer solutions. So what I do is I work with teams like Jupiter, as well as other like traditional finance companies to basically get the on-chain data that they need. As Kash mentioned, on-chain data can be very complex. And so I help them reason and understand how they can get the data that they need and then add it into their analytical workflows.
Yeah, I'll say it a little bit less politically correct. On-chain data is to work with. I mean, Jupiter tracks like 2 million capital markets across the chain, and Dune, I don't even want to begin to understand what you guys are doing out there. It has been crazy. Let's talk a little bit about what you've been seeing on-chain recently. So what can you tell us about on-chain dollar?
When you look at the traditional product space and then more products coming in on-chain, it all comes down to money, right? When I think of money, I think of like money as like moneyness, an adjective, and that all of these products that are being built out, they have some sort of moneyness that always fall into the final state of getting that money into like the digital dollar. So like when you think of it, the staple here is going to be stable coins. So when you look at the whole space, they're effectively like the money supply of everything that's happening in the space. So like when you're looking at measuring like liquidity or just like on-chain flows, stablecoins is the first thing that comes. And then it also determines like what's the risk appetite that we're seeing in the product space. So like right now, as you can see, the whole on-chain landscape, it's around 335 billion in stablecoins sitting on-chain. You can see that's like the chart is obviously not a straight line, increasing over time. There's the bear market and then increasing, it's back at its all-time highs. This relentless climb is not determining of, oh, like we're comparing like the price of like Bitcoin. Bitcoin is like up and down right now. This signal right here is, oh, we're actually seeing institutions coming on chain, and actually this is like the clear signal that we see is important. And then what's like next is going to be like, where do the dollars go, right? So that's going to be trading, credit, then like yield. So like the real question, I guess, is that how many like dollars? It's like where they are and what are they doing with those dollars? And that all starts with stablecoins as the first part.
Tell us a little bit what's going on with Solana.
So Solana is the third chain with the most stablecoin supply. So if we're looking at where the market is growing the fastest, that's where Solana takes the lead. A year and a half ago, $6.6 billion. Now we're at 17.7. That's a 3x increase in 18 months, which is the fastest growing. And I think obviously that's going to continue growing as more institutions are figuring out that Solana makes a lot of sense for like tokenization for products. And just like the speed in itself is very interesting to them.
Absolutely. I think it's actually usable, which is funny enough, I think that people really care about over time. So the liquidity is starting to come there, but that's not all, huh?
Yeah, that is not all. I would say even more like when we're zooming like into the nuances, like by raw supply, obviously like Solana is third. And then when we're actually looking at like the next leg or like what comes next, the thesis here would be like just getting dollars on chain. That's already done, right? There's 335 billion all-time high. Phase 2 is like what's happening right now, which is like taking the idle liquidity and putting it into work. And an example of that is on-chain credit, lending, borrowing. And I would say what makes this cycle different, or like what you can borrow against, or like new venues are like widening the collateral set way beyond the usual like blue chips. So like more of those like on-chain dollars, let's say they're like more on-chain assets become like more productive. So like, which brings me to like the best example is like Solana, right? Like moving into like on-chain credit. And what makes the most sense here is that, like I said before, the adjective of moneyness, this is obviously a product that there's interest. Obviously everyone wants to make more money, right? So when on-chain credit becomes more prominent and it becomes more of an area where there's genuine interest, as we're seeing the increase in the surge, this becomes a real like indicator for like what institutions are looking at, what users are looking at, what traders are looking at to actually like break in and be involved in the market.
Absolutely. And there's one place that is very much involved in that market. What are you seeing around Jupiter so far? When you think about credit?
Yeah, for Jupiter, I mean, obviously you guys work with us very closely, and these data points are obviously what we've verified and validated against. And what we've seen is that like you guys are running 2 credit venues. together. Based on what I previously said, they're covering both ends of the spectrum. First, obviously, there's Jupiter Lend, the pool-based side. So it's like an Aave style deposit into a pool, borrow against it. It's already over 2 billion, the total supply. And then we're seeing 869 million actively borrowed, which is a serious credit market right there in itself. And then you look at the deposit mix, right? It's not just SOL and stables. There's actually liquid staking tokens. You can even see like some tokenized stocks. So like tokenized Tesla, like I would say that's like the main signal for me as like the collateral curve moving up in real time. And then obviously the second is your new product. So congratulations to the Jupiter team. This hit public beta last week, as Whitey said. Shout out to him. So it's obviously peer-to-peer, as you guys mentioned. There's no pools, no oracles, no liquidation engine. You post an offer and then someone fills it, fixed term USDC loan. The point is you can borrow against basically anything on Solana, which that in itself is very tech forward, I would say. And then the long tail stuff like a pooled lender structurally can't touch. What I'm super excited about is that with Dune, we were able to already like decode the new offering and decode the actual like offer book. And so what we're seeing is that there are already 380 plus open offers live. And then we have this like fully decoded within days of launch, which we can already see like every loan on chain against the whole spread of collateral. It's small and early, but even though it's small and early, it's real and live. And then like both of these are like fully indexed. And so we're going to see that growth, and we're going to track that growth together to see where it'll take us and where we will go.
It's one of the really interesting things about Offerbook, and I think about like on-chain credit in general. These big banks, they have trillions of dollars on the loan book, and it is all kind of like tucked away, hidden. Only like the executives of those companies can actually see it. The idea that Dune, like you guys as a third party, now a partner of course, but like as a third party nonetheless, we're able to like actually examine every single thing that's on the book and give that full credibility or full visibility to every other user across the world basically instantly. I think really speaks to how interesting the future is going to be around here.
Yeah, super excited. And I would say the biggest loop right here is like dollars are coming on chain. It's at an all-time high. They concentrate where the activity is. And then like Solana, and then that's where the main activity we're seeing is happening, or top area where we're seeing is happening, and they get put to work, right? So like Jupiter's Lend and Offerbook. The one thing I'd watch is like, does Offerbook's collateral keep moving up the quality curve into tokenized assets and RWAs? That's something that I'd be interested in. And then how interested the institutional space look into that.
If you are an institution watching this right now and you need a loan, please reach out. We have a few actually like very, very large loans where we can't find enough lending liquidity for them right now. So we're trying to do like, there's people coming to be like, hey, I'll buy $5 million fixed, but I need it like in the next 2 days. Bro, I don't have that money right now. Yeah. Hopefully as the book continues to get deeper, as the markets get more liquid, as the usage continues to tick upwards, that might start to change. Before you go, Karim, thank you for taking us through it. I think that like this emphasis on kind of moneyness, I think is really interesting. This idea that a lot of this is happening on Solana and credit is really the thing to be looking at. Couldn't agree more personally. I tell everyone, or not everyone, I tell a lot of people on our team and certainly people I meet out in the community, Dune is like one of the best places to start as you're getting more on chain, right? Like if you don't understand the data, you're missing out on one of the biggest benefits, that this whole thing is open and transparent and happening in public. For people who do want to get a little bit smarter at looking at on-chain data, what can they do with Dune? What kind of advice would you give?
I would say the main advice right now is one, creating an account, and then two, just going off on our new MCP. That's like what we've seen has been like the Dune MCP itself has been a huge help in understanding what the space is, what the data that you can get as more institutions are coming onto the on-chain space, and that we're working with them closely. What we've seen is that part of their understanding or part of them breaking into the on-chain data space is there is an educational aspect that we provide to them so they can understand like what does this mean in TradFi terms to them. So for me, I would say like the biggest area of interest is our MCP, because that makes things a lot quicker and a lot faster. You can just connect it into your existing Claude workflows. But that's my main advice, honestly, at this where we're heading and where we're going. That's where you should be looking at.
The alpha is all there waiting for you to find it, folks. It's just there on chain. Go find it with Dune. Karim, thanks so much for coming out, buddy. It was a pleasure to have you.
Thanks for having me on. Take care, Kash.